I usually say the better the talk of the CEO is, the worse the company.
They've got solid revenue, they've been growing earnings per share, but they have some serious longer-term solvency issues.
The CEO's comment on this exactly is, this will help us fail faster.
What's the point of investing in a company if you can't be confident that they're going to deliver profits for shareholders and be able to sustain their business?
What's up, guys? Welcome back to Beyond the Edge podcast. This is episode number 5. Got my co-hosts here, Mr. Fundamentals and Trend Tracker. We've got some interesting stories for you today, and we're going to just jump right into it. First thing I want to talk about is always a lot of fun. Spirit AeroSystems. This is one we've been joking around about. You've seen it in the news. Poor passengers on Alaska Airlines flight literally had a door blow off the plane. Oxygen masks falling. You can imagine what that's like. If you're the person who paid an extra $45 to sit in the exit row, I don't know. I don't know if you're ever doing that again. That's a big mistake. Stock tanked on the news, and we're going to discuss a little bit about that. Mr. Fundamentals, you and I, we were chit-chatting a little bit about this. I know you've got a lot of action planned for these guys. Do you want to kick it off? What do you think about this story? What do you think it's going to do for the stock?
Yeah, I'd love to. I mean, holy crap, what a news. And really, this is just like a series of trouble for this company. Crazy enough, they have like a lawsuit going just over a month ago that is essentially employees from the company calling out the lack of safety regulations and requirements and just the number of defects that the business has essentially pushed onto its customers. And I believe even one of its customers basically said that this is going to lead to a big catastrophe for one of its clients, and here we are having these troubles. So, I mean, by any means, I don't know if you are an airlines manufacturer, but how are you going to trust a company that is essentially bypassing all the regulations and safety requirements and taking it and building it on a jet? Like, that is just a lawsuit waiting to happen, and there's no doubt that this is going to stack up. So yeah, crazy enough, but love to hear your guys' thoughts just from a first stance.
I'm not trying to smile and be morbid because this is a horrible thing, but I just it's so unbelievable. Like, you imagine sitting in a flight taking off from Portland and then a door literally blows off, oxygen masks drop down. What does it feel like having the cabin depressurized that quickly in that cold air? Like, that just seems like something that's got to strike you as top 3 fears of something horrible that could happen. It's just hard to even believe this can still happen.
Complete side note, there is a TikTok of someone who was on the flight, and she gave a complete play-by-play after it happened about what it was like. So if you are interested in traumatizing yourself, definitely give that a watch.
Pete, tell me about that screenshot you sent me on Instagram.
Well, I don't know, Kev. What do you think? Do you think this plane had Wi-Fi? And I think we'd have to double check at what time this flight took off and when it was in the air, because this would have been the all-time short of all time.
If
your Wi-Fi, you see the door pop off, you're still getting service, pop a short in, make a quick 10-15% rip on it, you're the first one to know. Yeah.
Hilarious.
I wish I could take credit for that joke, but I saw it on the gram and I sent it over to Kev. And yeah, again, not trying to make light of a situation. Very lucky no one was harmed on this. But in terms of all-time short sells, this would be number one for sure.
Yeah, man, no doubt.
Now, I mean, that's got to be trading on material, non-public information. But the likelihood you get caught.
Yeah.
How do you even get caught? I don't know.
Pretty nil. I think, actually I think they found the people's cell phones and someone found the door. So, that was public information at that time. So I don't know. I don't know if it would go down as an insider trade.
Yeah.
And I mean, honestly, an interesting point of what constitutes an insider trade.
Yeah. Sorry, just on that note, I think it's as Pete said, an all-time short trade right there. But really, when you look at this business, this could be a long time short. The business, it's been growing its revenues from 3.4 billion in 2020 to 5.56 over the trailing 12 months, but everything else is declining, and their net losses are mounting. They have over 3.9 billion in debt, and they're paying a 7.4% interest. So it's fundamentally just like not a very strong business. And I think this is like a bigger reflection of the airline business in general. I think it was like Richard Branson who basically said like the quickest way to become a millionaire is to start an airline business and be a billionaire. And that's the thing, like these businesses, they cost a crap ton of money. There's a lot of maintenance involved. And then when you look at like an industry leader like Boeing, like I would honestly argue they are the worst monopoly an investor could buy. They own over 60% of the commercial airline market, and yet they have just struggled hand over fist, are riddled with controversy, and are really doing nothing to really like establish themselves as a key player. And you know, what's the point of investing in a company if you can't be confident that they're going to deliver profits for shareholders and be able to sustain their business? They've essentially gotten a free pass because nobody else wants to compete in such a terrible business or like industry from an economic standpoint. So just a bigger reflection of the whole market in general.
It is interesting, but a bit of the history on this company, they are an extension of Boeing, guys. And I think there's some interesting PR moves here in itself. This company was founded in 2005 when Boeing got out of the fuselage manufacturing business and started, actually subcontracting some of that stuff. And probably because they looked at this and said, this is a cost center that we don't want to be a part of. We don't care about being vertically integrated in this part. Similar, they buy their engines from a Rolls-Royce. Very kind of similar idea here, outsource the fuselage manufacturing. So in 2005, but Boeing owned this. And this was created. This is not a small company at all. They don't just manufacture fuselages for the 737 MAX 9. They do some other airlines as well. They do almost 1.5 billion a quarter. This isn't anything small, but I do feel there was some PR magic because the 737 MAX series has been riddled with bad press for Boeing with good reason. A lot of shortcuts were actually taken in the development of that plane. And now we have this bigger issue where they seem to be just pushing it downwards, being like, hey guys, we're not the manufacturer of this. And obviously there's been other problems. I feel, I hope this isn't a broader problem within the airline industry of, what's representative of Spirit's production capabilities, because this was also unique in a sense, if you actually look into it, to the configuration of the operators themselves, in this case Alaska Airlines. Due to the certain configuration of more economy class seating, they actually had more seats in there than, let's say, we might fly on an Air Canada. So they actually required the extra exit door. It's not on every 737 MAX 9. So
I've actually heard they're marketing future Alaska Airlines flight as with premium airflow. So it could be a bit of a marketing.
You really got to experience the outdoors there for sure.
Yeah. Oh my gosh.
Best ground view of any airline. People pay extra to have that in a helicopter, to have the door open.
Yeah, I think, but to talk to a bit of Declan's points in terms of how these are bad businesses, they rely on governments. Boeing relies on their government contracts as well. In the defense side of things, Spirit themselves was, I think, got a $75 million check from the government during COVID. So these, fundamentally are very interesting businesses. Spirit saw a jump about 2 months ago prior to a bit of this lawsuit when they announced kind of a bit of a new pipeline work on these Boeing jets due to some of the issues they had. And this is something I'd like to investigate a little bit further, because a bit of this Boeing scope of work had to do with some issues with the fuselages that, in fact, it seems that they may have created. So, I think that's really going to be kind of found out as well.
Mm-hmm.
Yeah. And just,
what really makes me nervous about this, really quick, Deck, I'll just say this. What really makes me nervous about this is actually, just like you were saying, they have grown revenue, which is impressive. They've massively grown their net loss too. Up till trailing 12 months is almost at $1 billion net loss, which is double their net loss for all of 2022. And look at their liabilities. In just current liabilities, it's $1.3 billion, and they have $658 million cash on hand. So maybe somebody would argue they've got another billion in accounts receivable, but something tells me they're not going to be collecting all those accounts receivable, right? If Boeing is one of those customers and they just had to ground all these airplanes, I wouldn't be surprised if a lot of those account receivables don't end up coming, landing in their account. So they have a massive near-term liquidity problem. Like they're trading at a price to sales of 0.6, so the thing's priced as cheap can be. But I think I wouldn't be surprised if people are expecting either this thing gets some kind of miraculous rescue or acquisition from Boeing or somebody like that, or this company just might not exist in the future.
Yeah. And isn't it like ironic?
It'll be interesting.
Sorry, Pete, just to jump in here. Isn't it like ironic just the fact that like Boeing, like you said, was trying to trim down and become less vertically integrated, and so they sell off these companies, they spin them off, and yet they remain slow. They haven't made adjustments, and nothing really has changed in all that period of time. And it's still the same company. They haven't been able to spin off new products that really have bought investor and also just stakeholder interest in general. So it's one of those that it certainly doesn't help when one of your key suppliers' reputation is on the line like this, and you essentially get the majority of your parts from them. So I don't know, tough buy on my end for sure.
Yeah.
Yeah, I think it might recover a little bit. Obviously, I think this is a bit of a news cycle, and people are going to be a little bit of a wait and see. This is a B2B business, so trend trackers not necessarily analyzing it the same way. I will give maybe my 2 cents on the long-term outline of the aviation industry and what might be some bit of a downturn economy. Earlier on, when they were looking at some of their production manufacturing pipeline, a lot of orders were canceled from airlines to Boeing, and then that obviously trickles down to them. So I think one of their more recent orders, when they were expecting 100 new fuselages ordered, Boeing kind of had to go back to them and say, no, that's not the case. That was about 8 months ago. That's kind of why we saw a bit of a dip with them in the past, year, and then they kind of came back with a smaller, contract from Boeing, which was more of a repairs and maintenance. So not bullish on the, future pipeline for them. Short term doesn't look great. I think we're passing.
Steer clear.
Well, steer clear. Yeah, I don't see any way you spin this that it's an exciting stock. It cracks me up that some of these analysts covering it are saying they're not too concerned about this. It just makes me wonder, how deep are they in on this stock?
Yeah, they're holding, guys.
Oh my God.
Yeah. You're holding all the way into the ocean where this thing's likely going to land. I don't want to talk about airlines anymore. I want to talk about something far cooler. So we started talking about old industry, low multiples. Now let's go to the opposite. Let's talk about some bleeding edge tech, high multiple. I want to talk about Recursion. So they've been in the news. I actually noticed they changed their About Us section. They were formerly dubbing themselves a biotech company. They've got multiple drugs in the clinical process, multi-billion-dollar market cap, revenue, not even close to that, but as is quite common for successful biotech companies. They're now referring to themselves as a tech bio company after this latest announcement. It's a partnership with NVIDIA. Basically, they've built a large language model for drug discovery. Wildly cool. What an excellent application for a large language model to get AI to basically make these like super scientists. I think that's incredible. This was a recent announcement. And yeah, like I said, after that, they've changed their whole About Us section. So it looks like, I don't know, I'm not going to say a company pivot, but certainly a focus more on the more marketable aspect of the business, which is this AI model. There's a lot we can talk about with this company. Maybe I'll just give a few highlights of this. They got partners with Bayer, Genentech, like I mentioned, NVIDIA. They have revenue, we're talking 40-ish million in 2022. So it's not like, considering the size of the company, it's not large, but they do have revenue, which for many biotech companies, that's actually a rarity. So they're a money-losing machine as well. They've lost over $200 million in the last year, but they're also well-capitalized as well. 700 million assets, 200 million liabilities, quite healthy. 550 million of their assets are cash. So certainly, they can fund themselves for another couple of years with continued losses of the same magnitude. So no massive risk there. But let's just dig into them. I don't know who wants to kick it off, talking about their AI model and what this could mean for the industry. Do either of you have strong views on this?
Very.
Yeah, very okay. Trend tracker, Pete, let's go.
I think I said in one of our earlier podcasts when we were talking about AI, in the short term, there's likely no application I'm more bullish on than healthcare overall. What we're able to do now with data processing, I don't think the general public really understands. Obviously, when you look at us in terms of healthcare, however you want to break it down, we have DNA, we might have defects in it, we might have early warning signals that create these chronic diseases that, especially as millennials are starting to get into an age where they might be experiencing health problems and are tech savvy and kind of believe in technology, this is a huge market. I'm trying to figure out how to best explain this to you in terms of data processing with, the millions and trillions of cells we have going on in our body, but maybe I'll try to do it like this. 10 words in the English language have over 2.5 million combinations. A deck of cards, which is 52 combinations, has likely never been dealt the same way twice. Wow. That's how many combinations it has. 67 zeros. Think of all of that. So yeah, 67 zeros. So that's 52 combinations, right? If then you obviously multiply it by like suits and all of that. The English language commonly used, about 250,000 words with slang. I don't know what the computational number is of how many combinations that has, yet the predictive power of that to predict what word will come next is insane, right? That we're able to do this now. And the applications of that, I think I used this exactly as an example in one of the earlier pods, is how is this going to be applied to healthcare? And what's interesting in their case here with Recursion is they are using this for drug manufacturing pipeline. So the success of them, which we might not get complete access to, really relies on their proprietary data, because that's what they've set up now. They've set up their entire data field. Previous to this, you would have to be, kind of a bit of a data scientist, create a little machine learning model on a spreadsheet through Python, however you might want to do it. What you can do now with this new Recursion tool is just type it into their data, and it will actually amass what you're looking for as a scientist or a drug developer, everything. You don't have to be tech savvy. They've layered that LLM on there. And what this will likely do for them is drastically reduce the time to seeing if a drug will be successful or not. That's how they're applying this first. It's an application I hadn't even thought about. It's very interesting to me for sure, because the average timeline of getting a drug to market is anywhere between 10 to 15 years and costs billions of dollars.
A gazillion, yeah.
And 90% of them fail. So, the CEO's comment on this exactly is, this will help us fail faster. Rather than taking something all the way there, they're leveraging this to see what is viable, what will work, what won't work. What I think they rely on is what data they currently have. They went public at a very good time, probably got decent capitalization initially, and are kind of create some interesting news all the time. So that's kind of what's happening here. It's really interesting. It's a really interesting use for AI. I'm incredibly bullish on AI in healthcare. So I'll kind of take that back to you guys. What do you guys think about all that?
Well, I'm trying to understand this, so I won't pretend to be an expert at healthcare in any sense. Biotech, I'd say, is an area I feel the weakest. When I'm trying to understand where AI would play into this, I'm going to take a guess, and you guys tell me if I'm on the right track. Like, if you can basically, I'm guessing they've kind of made what's like the Chat GPT for healthcare is where my brain goes. So it's in natural language processing. You maybe explain the properties of the drug, explain the population that you're going to be giving it to. I'm going to guess down to the granularity of patient number 1 has previous history of XYZ. They're 52 years old. They're blah, 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 blah. Like, it's probably a ton of natural language information to put in. But then I'm guessing it just takes what would be a 5-10 year clinical trial pipeline and just hammers it out in a lot less than that, whatever the time is.
Exactly. So however they want to use those data points, we don't necessarily know that today. But you're right in that sense that they're creating, points of data saying XYZ, whether patients have this or whatever it is, and just typing it in and say, give me some likelihood. They're creating more predictability. And what I want people to understand is the accuracy of that predictability is so much better than you can think. So I'm not sure if they necessarily created their own full LLM. My assumption is they are leveraging something that's already in existence and kind of doing polls. I think what's most interesting would be their own 1P data or data sets they have. But yeah, Kev, you kind of summed it up well.
I think they did build their own large language model. Now it's with a partnership in NVIDIA, so would they be something to look more into? But one key thing that I found particularly interesting is that over the last 10 years that Recursion's existed, their data set that they've built up is one of their most valuable assets. So you look at ChatGPT and all of its brilliance, they're getting sued. So for example, New York Times is suing them for, I believe it's like $1 billion because they used proprietary articles that were actually behind a paywall to train the model. So sometimes when you ask ChatGPT a question, it'll spit out an answer that you wouldn't have received unless you were subscribed to the New York Times. So they're actually like illegally using proprietary data. With Recursion, their data set from their previous experience as going through clinical trials is one of their biggest assets. So they have this super valuable data set without risk of essentially, being sued for leveraging other people's data. So I think in my mind, that's one of the most interesting things about this stock.
Yeah. So just to jump in here a bit.
For sure.
Sorry, just to jump in. So, there's definitely, it goes without saying like how valuable this technology is and what it can do. And it's interesting, like Recursion is kind of coming to the limelight now, because there's a company called Epsilera that I was introduced to maybe in early 2022, and they were like, the company was backed by Bill Gates and had a lot of really strong partnerships and everything, and similar like market cap and everything. And essentially what they were doing is what Recursion is doing here, where what they would do is they would sort through the trillions of different antibodies, and they could hone in on like the 23 best ones. And so to your point, Kev, like that really fast tracks and also like reduces the fail rate of these pipelines or tests. But of note on that, so kind of my experience with the stock was I was very interested. They were coming off a record year. They had reached revenues of like 485 million and were making 159 in profits. And it, everything screamed buy. The only thing that kind of like made me hesitant was just how young the business was. I wasn't sure exactly like how durable or sustainable their moat was. And so I held off. And I'm kind of like glad I did, because basically what happened over the most recent year is the revenue dropped from 485 million to just 50 million. And they lost 129 million from 159 million profit. And so the two,
that's what this looks like.
Yeah, right. Exactly. So and kind of like my takeaway, the two reasons or conclusions that I kind of made from it. The first is that companies like Epsilera, like they were really dependent on the revenue and the success they made from COVID. So partly these companies really bank on like insane, chaotic outbreaks that happen to make absurd amount of money. Now, of course, there's still always room for them,
by the way.
Yeah, exactly, right? Like to benefit from that. And then just the other thing is more from the AI standpoint. So, it again adds a lot of value. The one thing I'm taking away from this though is like, what's stopping the companies like Eli Lilly, Pfizer, Merck, all these other like big giant pharmaceutical companies from building their own LLMs? Now, there was a time where I would say like Epsilera offered a value, or even Recursion offered value from the standpoint that it wasn't worth the investment and time for these big pharma companies to build these things. But now the AI is getting so cheap to develop that like, how long or how sustainable is this competitive advantage? Because, they may have 23,000 or terabytes of data, but what about a Pfizer or Eli Lilly, those kind of companies? So it's, I don't know if that's necessarily true, but that was kind of like what I took away from it, where I was like, man, like, it's cool tech, but really, can everybody do this? Or is this something that really is proprietary? So anyways, that's my, I guess my take.
The question is, like, is the value in the data, or is the value in the tech? I guess that's the question, right?
Data.
So if it's the data, then I would say the Pfizers and the Modernas of the world will eat your lunch. That's what I would guess.
Well, not the Modernas. Don't worry about them, guys. They won't be. That's
you get my point.
That company's a story for another pod of when we can talk about the greatest pump of all time. But
really, okay, that's a story I'm looking forward to. Maybe we'll do a biotech episode and talk about that.
For sure. I think for sure on AI and biotech, I think we could do this for sure, because this is something that is going to revolutionize the industry for sure. The pivot of their CEO saying this is a tech bio company. Do I like that? For sure. Is he a tech guy? No, right? He himself is not. He's a PhD. He's obviously a really smart guy. And on kind of growth stocks, I have my own system kind of when evaluating the CEO. And it's unfortunate that I usually say the better the talker the CEO is, the worse the company, because their CEO is incredibly well-spoken and can really communicate well and get people pretty excited. He's done a great job of kind of promoting the launch of this.
Time to sell. I can imagine their investor relations department with their PowerPoint presentation. Okay, guys, we were biotech, but hear me now. Tech bio. Like, okay.
Whoever the IR guy who did that, oh yeah, take my money for sure. They did a great job. Yeah, I love it. I think it's a great story. I think if they can deliver on it, it's amazing. I think there needs to be a little bit more due diligence of what adoption looks like. I think when you look at, they got 50 million from NVIDIA. That's a rounding error for those guys lately this year. So I don't think that's a huge risk for something like NVIDIA. But I think when you go back and you say, we talk about a Pfizer of the world or an Eli Lilly, of someone who might be interested in getting into this, if the tech's good and the data's good, it's an acquisition, right?
Yeah.
Yeah.
So many questions. So many questions. One final thing in my mind anyways, just looking at the ratios as we do, and I'm being generous here, trailing 12 months, not even looking at like the most recent reported annual revenue, trailing 12 months, $47 million. That's at, so they're at a price to sales of 55x. So this is an expensive stock, no matter how you slice it. There are AI companies obviously trading at very, very high multiples like that. Biotechnology, not so much. I think 11x is more average from what I understand, or even below that in some cases. So they're trading like an AI company. The question is, are they an AI company first, or have they just done a brilliant job marketing? I say the valuation is, as much as I like this company, I'm interested in it, a valuation that high, they stumble and the stock's going to tank. You know what I mean? Yeah. So that fills me with a lot of nerves.
Yeah. I would share a similar sentiment.
Yeah.
I think that's just one of those businesses that, again, the tech and what they're doing is very cool, and I'm sure it'll create a lot of value, but does the price justify it? In my eyes, and like you said, Kev, that kind of valuation, it's really hard to sustain that over a long period. And how much of this is really driven by, just simply announcing that, we're using AI to our advantage and leveraging it. Like, is this going to fundamentally change the business? Well, you got to find out over the next couple of years, really, really how that translates. So I'd rather just sit on the sidelines and kind of watch. And, if it blows up, then you kind of just like, you bite the bullet and accept that you missed out on a stock like this.
Yeah. But did I mention tech bio?
Yes. I might buy that URL right now if it doesn't exist. Give me a second, guys. I'm gonna check GoDaddy. Yeah, but
we all just start bidding against each other.
Yeah, that might be the best trade of the year. I think to come back, I think the trend is your friend on this one. But Mr. Fundamentals and I spoke, I think, about 3 months ago when talking about LLMs that are, not really actually LLMs, are layering other tech, and then kind of what are they layering into? I think that's what we kind of have to understand. I think Declan, I mentioned to you, expect to see a lot of these pop up because it looks cool. Oh, I'm able to pull this data very easily. Yeah. It might not be the product it seems to be to the average eye. That being said, Mr. Fundamentals has polished off his 2024 AI report of something that he's been working incredibly hard on. I gave it a read last night. Super excited to launch that one to everyone.
Yeah, that's an absolute beast. And Pete, hate to break it to you, but techbio.com is gone. However, techbio.ca could be yours for only $12.99 Canadian. So
What about techbio.ai? That's got to be worth $1 billion marketing cap right there.
yeah. Let's see. What do we got? Sorry, sir.
Take him.
They're trying to pitch techbio.ca again. Okay, get over it. We don't want it. Okay, guys, moving on. Let's talk about dating. Online dating, of course. Match Group. So they've had some news coming out with $1 billion stake coming in from Elliott Management, some known activist investors. So if you guys aren't familiar, actually, I wasn't familiar, Match Group, Inc., they've owned it all. Look, they own Tinder, Match, The League, Azar, Meetic, OkCupid, Hinge, Pairs, Plenty of Fish, Hakuna. I don't know if I'm too old for this, but like I don't know like 3/4 of these, other than Plenty of Fish is actually a local. I actually know the guy who sold that off, but not overly familiar with the rest of these. Quick little highlight reel. How about this? Is one of those companies that I like the space. It's software. It's never going out of business. Online dating is not going to go out of style. They own every angle that you could imagine on this, consumer vertical. Mm-hmm. So if one fails, another will probably succeed. They've got solid revenue. They've been growing earnings per share. We can get more into that. But they have some serious longer-term solvency issues. They have a lot of debt. So why would an activist investor make $1 billion stake in this company, and like what would be the plan? That's what I'm trying to wrap my head around. Have you guys thought about that? I don't know if one of you wants to kick it off.
Yeah, sure. I'll take the lead here. So,
hit it, Jack.
I think it's really a lesson in just like the durability or strength of the business model, and like you said, Kev, like Match essentially like dominates the market. They have a 42% market share in the dating services space. They've been profitable every year except for 2 since 2009. And, they've done well on paper that way, but, they're struggling because their debts are mounting and they've had essentially no shareholder equity over the past 5 years. So, why a management or like a hedge fund like Elliott would come in to try and turn things around is essentially like maybe they see untapped value, and management has just not been aggressive enough in trying to grow the business. And to that point, like, their revenues, they were at like 3 billion 8 years ago or something like that, and there's 3 billion today. So, they've kind of gone through a wave there, and maybe a management team like the investment fund sees this as a potential opportunity to unlock more by really, trimming maybe some of those dating services that aren't as productive, and getting rid of assets that really aren't driving the bottom and top lines. So that's kind of where I see them coming in and making a stance. Of that note too, also Match they decided to appoint a new CEO. The CEO of Match Group is actually overseeing both companies, but they've now directed that to somebody else. So just more moves to really start churning the wheel and start making money again, or growing anyway. So that's where I see it from that standpoint. But yeah, I don't know. It's tough.
I'm going to risk being a broken record again, and maybe we can put like a little ding every time I say this word, but I think this is a data play again as well. I think that's where a lot of value is moving into things. I really, maybe we'll circle back on this in a couple of years, but data is kind of a new oil going into 2024 and beyond, especially how AI is going to impact things, because 97% of the revenue is direct revenue. So that 3%, of how they kind of expand that through other things like direct revenue, talking about subscriptions and other things like that, I think there's a lot of opportunities. Because when I look at their main site, match.com, which, has been relatively flat in terms of users and how many people are on that, maybe some of as they kind of start owning a bit of the dating market, there's, I think, a lot of extensions you can do with the right amount of data. You can have a lot of interesting extensions beyond that direct revenue. Think about seeing, not to freak everyone out, but you can often see if people come back to the app if they're single. How long are people staying together? What happens when people stay together for a long time and are off the app? Are they potential targets for marriage, kids, all these other things? If you have early data into that, there's a lot of opportunity. I don't know what they're thinking. I think like what their play was. I'd be really curious to see what a pitch deck was for kind of this recent deal and what they said the future would look like for their revenue growth.
I'd be curious. Like, I almost wonder, like, you see these influencers, once they have this massive audience, they sell e-commerce products like Logan Paul and Prime, for example. Like, could Match Group start doing that? Like, I remember hearing this story in business school that blew my mind about how Target, oh man, this was crazy. So Target has such a big data set, bigger than you would expect. And they actually managed to predict that some lady was pregnant before she knew she was pregnant based on her purchasing behaviors and how it had started changing, and certain things like cravings and things started picking up. And they actually started giving her ads for like, I don't even remember what it was, like diapers or something baby related. Wow. And it turned out that they found out she was pregnant before she did. And she actually sued them because it was a breach of privacy in her mind. So think about what Match could be doing if they wanted to start selling products or branding their own products and selling it to customers. I don't know. I'm just thinking off the top of my head here.
And that's it. And because those exact privacy issues, that's going to be a very big thing in the industry of web browsing. But at the end of the day, if you want to use their app to meet someone, you're going to have to agree to their privacy policy. You're going to have to agree to their data privacy.
Which you read the whole policy, of course.
Every time, of course, guys. Every time. So no, we all know it's a laughing matter. People don't read it, but at the end of the day, Kev, you're absolutely right. It can predict those things. It can likely start better predicting who you should date. I mean, I don't know if that helps their model if you're finding people that you'll like or not.
Yeah. I don't know if their goal is you don't need the app
you're not
anymore.
A subscriber. Yeah. So I don't know. That's pretty interesting. We'll leave that one to their data scientists and how they're building their algorithms.
Their proprietary algorithm works exactly like this. They feed you crappy match. Oh, one good match just to keep you interested, but they know it's not a perfect match. They know you're getting 2 dates and then you're out of there. That's how good their system is. They can give you dates that appear good to keep you swiping, but they know it's just going to fall apart and keep you subscribing. There it is. That's the business model.
Yeah. And who knows, maybe with AI too, they can... Oh, sorry. Just before we answer there, Pete, but just like... Maybe they can create like AI generated girlfriends and boyfriends now that people can start to hang out with and use all that data to just essentially keep you hooked on there.
That is a thing. Yeah. We could do an episode around that. That is a real thing.
Yeah.
Sadly.
To your point though, Pete, I met my girlfriend through high school and everything. So the old natural way that way.
So you guys have been dating for like a year? That's awesome.
Not that young.
Get him.
Too funny.
I have a fun idea for something I want to do to kind of wrap up this segment. Knowing what we know now, this is just more for fun than anything. I'm going to tell you like a quick little blitz of some key data points, and then I want you to put yourself in the minds of Elliott Asset Management and give a couple ideas of what you would do as an activist investor to unlock a little bit more value in this stock. Just for fun, we'll come back to this maybe in 6 months or so once we know what Elliott's plan is. But okay, here's a company that, just like you said, Deck, they've been sitting around $3 billion revenue annually for quite a while. COVID, they had a market cap extraordinarily high. I think it was 40 something $billion. Now it's closer to 10. They've actually done quite well in the sense of like growing their earnings per share. Like 2022, they're $1.28. If you look at trailing 12 months, it's closer to $1.80. They have, trailing 12 months, $506 million net income. So it's a healthy business revenue wise. Total assets, total liabilities, things start to change. Total assets, $4.2 billion. Total liabilities, $4.5. So a bit of a long-term solvency issue. Short-term, current liabilities, $500-ish million. Current assets, $800-ish million, over $500 in cash. So no massive near-term liquidity issues. They own every brand that you could see. If you look at their expenses, it's nothing really stands out. Like they've got a pretty significant research and development budget, pretty significant sales and marketing budget. So potentially some things that they could scrap. Mr. Fundamentals, let's start with you. What is a couple things you might do to unlock value in this stock?
Yeah, so I think like the two big things that I would start with is one, start selling off some of those platforms or assets in general that really don't create a lot of value for the business. Really hone in on those top, 2 to 5 platforms and put everything into that. The second thing is start to trim down those debts. So, if they can essentially generate more cash through those sales and then as well be able to strengthen their balance sheet position overall, I think that would allow it to, one, become shareholder equity positive, which is always essential. You never want to get in a position where if things do, shit hits the fan, that shareholders don't benefit from it if they go bankrupt. So really from that end, but then the other piece of that is then, sure, maybe their revenues decline, but they can improve those margins overall and then continue to sustain that earnings per share growth.
Pete, what are you thinking?
Yeah, I think opposite, not dispose. I would look at acquiring. I think you're getting people very early on into a dating life cycle, and to not lose them as a customer, I think you have to go on of what happens after, first come loves, second comes marriage, then maybe a baby carriage. So I think that's
baby
the play.
dating app.
No, I would acquire. There's probably some pretty big digital properties out there right now in the wedding world. As someone who got married in the past year, it's very expensive, absolutely, and people are still continuing to do it. So I think there's obviously digital properties out there that they could look at acquiring and then funnel people into. And then after that, I think there's a lot of different digital properties that are helping, young parents learn how to be parents. And then, what does that expand into? And I think it's still a very similar model of probably a free app. I would, again, just go get one that exists. Don't try to create this. Find one that already has a good user base. Have some upsells to some premium features. Start looking at other affiliate opportunities to generate more revenue. And, the baby market is obviously also really big with the things you need to purchase for yourself. There's opportunities there in addition to content and education.
I like it. I think from my point of view, it's simple. Babies, they don't have an app where they can date each other. So that's clearly an blue sky opportunity. But if we didn't get traction there, maybe I'd do like a little Pareto analysis, do an 80-20. All these dating sites, I'm sure there's some that are more profitable than others, like Azar, Medic. Like I literally have no idea what those are. Pairs, what the hell is that? Hakuna, great name. Don't have a clue what that is. Like a Hawaiian dating app or something like that. I'm not sure. Dating app for like surfers or something. So I do a little 80-20, ditch what I could. I would cut down on things like R&D, sales, focus on the existing user experience, start saving money, paying down your liabilities. And then if there's an opportunity to spin something out, like what would be the hottest on here? Probably either, I'm guessing Hinge or The League maybe. Could you spin that out entirely? I don't know, maybe. That's kind of all I've got. I don't really know what else you can do other than the baby dating app. That's it.
Yeah. And one last point on it too is, you got to ask yourself how much of these platforms are cannibalizing each other and their audiences. Like, sure, maybe people have 3 or 4, but if you could get a user to focus on that main app that they enjoy the most and really unlock all their value through that, I think that's more beneficial than having them use 4 different free versions of the app itself. And then the other thing is just from the acquisition standpoint, like you got to be careful if you're acquiring using debt, as opposed to just organic cash flows, because that can really stack up quickly and get ahead of you if things don't pan out the way you want it to. And so just for those 2 reasons, like really be careful about having too many acquisitions or subsidiaries, because a lot of companies in the past have gotten into trouble running and overseeing too many businesses that don't really align with the long-term goal of shareholders.
Well, yeah, and I mean, not surprised you have that view. Warren Buffett was always super critical about acquisitions. So I wonder, could you start merging these? Maybe somebody goes to download Plenty of Fish, then all of a sudden it's Plenty of Hinge. Maybe it's Tinder Match. I don't know. Maybe we can squish them together. But there's got to be some way you could cross-market and consolidate some of that. But can't say I'm too familiar with that world anymore. So guys, normally we have a final segment here whether it's educational or it's a stock pick or whatever. I've been sick as a dog all week, so I'm actually amazed that I'm even here right now doing this. I didn't prepare a final section, so the 3 pieces of news are all we had for today. I'm happy shutting it down there. We got 45 minutes in. This was a good conversation. You guys feeling good? Any final thoughts you want to share?
No doubt. It was a lot of fun.
Easy
great
peasy.
chat, guys.
Yeah,
Okay,
yeah.
wicked. Well, everyone, thank you for tuning in. Beyond the Edge podcast, episode 5. Like and subscribe if you haven't already. Please comment below if you got anything you want us to talk about. We've been seeing good engagement in the comments. We love that. We focus on them clearly, and we'll be making more content about what you ask for. We drop this every Sunday on YouTube in addition to on our newsletter. Make sure you're subscribed. Otherwise, guys, thank you for joining. We're going to see you guys soon. Cheers.
Yeah. Thanks, guys.